but we're in. It's my portfolio time.
Let's do it. Let's do it. So, for context, a couple of weeks ago, I revealed my portfolio after the request from the Facebook discussion group. And after I did, there was a similar groundswell for you to reveal yours.
Yeah.
I mean, it's only fair.
Yeah.
So, take it away.
Well, I'm happy for you to lead any questions, but
Okay, all right. Well, okay. Let's start with overall portfolio construction.
Okay.
How do you separate your money?
So I split my portfolio. 70% is in ETFs and active management, and 30% is in individual stocks, alternative assets, and cash.
So a core and satellite approach, but for you, active management sits in your core.
I don't see it like that, but that's how.
Okay, well, that's how you just told me.
Well, no,
70-30.
my core isn't. Sorry, 70% is in ETFs and active management, and a core portfolio makes up part of that. That makes sense.
Okay. So let's go. So when I explained my portfolio, I sort of said there were three. There was a core, and then active and thematic, and then like stocks and satellite. So it sounds like you've got a similar situation.
Yeah.
So let's start with your core.
So my core is 56% of my portfolio, and I have 4 ETFs.
Okay.
I've got 2 leveraged ETFs.
Yeah.
One is the BetaShares geared US equity, so it's leveraged to the S&P 500. And the other is the BetaShares geared Australian equity, and it is geared to the ASX 200.
Okay.
Both market weighted, both geared to 50 to 65% internally geared. So BetaShares manages it all. I'm not getting any margin calls. So those are my US and Australia exposure. And then I have an ETF that gives me Europe exposure, total Europe, VEQ, the Vanguard FTSE Europe. And then Asia is Vanguard Asia ex Japan.
Okay.
So weightings wise, they're reasonably similar. Almost 20% to the US, 14% Australia, 12 and 12 for Europe and Asia.
Okay, and that equals the 56%.
That's 56%.
Okay.
Yeah. So that's my core. And at this stage, about 90% of what I invest on a monthly basis goes into that.
Okay, so
That's
4 ETFs covering most of the world, and you dollar cost average every time you get paid or every month or something similar.
Done.
Yeah.
Yes.
Okay, so let's go to the second bucket, your active bucket.
Yes, my active bucket. Now, as you've heard on the show, I have a small cap manager, Fairlight Global Small and Mid Cap Fund. That's 6% of my portfolio. And I'm leaving my small caps to the professionals.
Yes.
Not interested in index funds, not interested in, well, not interested, but every time I speak to the guys, I just love what they have to say and I trust them with my money. Then I have 2 active ETFs. I've got the Global X Semiconductor ETF, that's 4%. And I've got the BetaShares Australian Technology ETF. Now, I actually love this ETF.
Okay.
Its ticker is ATEC. It's all of the quality Aussie tech companies, minerals, and banks and whatnot.
Yeah, well, minerals and banks aren't.
No, I know, but it's like the top. It's got 41 stocks. It's got Xero, WiseTech, Car Sales, Computer Shares, NextDC, REA, Pro Medicus, like all the good quality. Some arguably slip in there. You wouldn't kind of think of them as tech, but.
Okay.
And just to give you an indication of performance, the ASX 200 last 12 months is 15%. ATEC is 36. So yeah, I quite like that one. And I know Luke told me when we did it to get rid of it, it's like boring tech, but I strongly disagree that Australian tech is boring.
Nice.
Yeah.
Yeah, well, that's good.
Yeah.
All right, so 3 in that sleeve of your portfolio.
Yes.
And then the final sleeve is your more individual stocks and I guess crypto. So what have we got there?
So on the individual side of things, I have very few. I have been consolidating a fair bit recently, and I'm trying to get all my positions that I want over the 5% mark. But to run you through it, so I've got Alphabet is my largest single holding for individual stocks at 7%, Macquarie Group at 4%, Berkshire Hathaway at 2%, and I've just got on the bandwagon of Mineral Resources. It's at 2%.
Wow, 4 individual stocks.
That's it.
That's
yeah.
it.
Yeah.
Okay.
So as I said, I did have a bunch more, but they were in the 1s and 2s, and I know I've got a couple here in 2s. I want to get Mineral Resources up there, and I'm just holding Berkshire mainly as a bit of a trophy because it's a Class A, and I just want to hold it.
Yeah. So Alphabet, Macquarie, Berkshire,
and mineral resources. Yeah. Then to close out the individual stuff, not 6% of my portfolio is in Bitcoin, and then I've got 9% sitting in cash.
Okay.
Yeah.
So
Yeah.
Bitcoin's a pretty big chunk then.
It is, yeah. So it's not something that if it goes to zero, I'll be like, oh, no dramas. Like I'll be peaking.
Yeah.
But I think how I'm approaching that is I just did a lump sum, and I'm not adding more to it. And like I'm up on it. I'm happy. I'm up on it, and I'm just gonna leave it.
Yeah.
I might add a little bit more here and there, but like I'm not DCAing or anything like that.
Yeah.
And that's. I'm just gonna. It's just sitting there.
Nice.
Yeah.
All
so
right.
yeah, that's it. It's
So 4 core ETFs, 3 active/thematic, and
Yeah.
then 4 individual positions.
Yeah.
Let's not worry about your crypto.
Yeah.
So it's only 11 positions in total.
Yeah.
That's
Well.
Very reserved.
Yeah. Well, I think a couple of things. As I've said many times on the show before, I remember when we spoke to Charlie, he was a big proponent of fewer lines as possible as you're building solid positions, and so I sort of took that to heart. And I think concentration builds wealth as well. So when it comes to individual stocks, that's how I think about it. Whether or not I'll add more to these, I definitely will mineral resources because I want to get that up there. But yeah, not just swinging at everything that comes by.
Nice.
Yeah.
All right. Well,
And it's hard to look at the performance of some of these ETFs and think that you need more.
Yeah.
That's
nice. Love
yeah.
it. Well, I mean, yeah, and the thing is, you've got literally thousands of positions between all those ETFs and active managers.
Yeah.
Let us know what you think of Bryce's portfolio. If you're watching on YouTube, leave a comment. If you're listening, jump over to the Facebook discussion group and let us know. Let us know whose portfolio you want us to go under the hood next.
Equity line.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.